blockchain is something which engages extreme reactions. There are some people who are terrified of blockchain, and there are some people who get very excited by blockchain. I think my personal sense is blockchain is here to stay. It will only evolve. Now, if I can just talk to you about Bluetooth, the growth of Bluetooth actually happened because there was industry collaboration, common standards, and the transaction cost or the way you deal on Bluetooth, the cost came down, right? Something like this will have to be put in place for blockchain for it to evolve.
We have the pleasure of welcoming Vikaas Sachdeva for this episode of Engati Engage. I'm Aishwarya Sankhe from the Engati team. Let's begin with a quick introduction. Engati is the world's leading open multilingual no-code chatbot platform, available across 14 channels with 25,000 bots. Created across 186 countries in every domain and use case. We run the Engati blog and the video channel, which receives upwards of 300,000 visitors annually. And now for our guest. Vikaas Sachdeva is the Chief Executive Officer of Emkay Investment Managers. With over 25 years of experience, he is an expert in marketing and distribution of financial products, working as the CEO of Edelweiss and Inam. He was a former member of the Mutual Fund Advisory Committee and has chaired the ETF Committee of the Association of Mutual Funds of India. His work has been quoted by many newspapers and publications. Welcome to the show, Vikaas. We're thrilled to have you.
Thank you, Ash. Thank you so much for the nice introduction. And it was really nice hearing about your company. I've been reading about it, and I must tell you two things. One is the people who drafted the entire copy, depicting your company. I think they've done a great job. And the second thing is it comes across as being a very young, very energetic, very lively company. So my compliments to you and your team. It's been amazing reading about you, and now listening about it has been even more exciting.
Thank you so much. So let's start with an open question. What has been the biggest learnings from your career?
Okay, so that is indeed a very open question. And, it's so open that I can spend the next hour talking about it. But I'll try to encapsulate in three basic things which I've learned over the years. I think the first thing is one has to be a student. One has to be a student, and that has been my biggest learning. Like you rightly mentioned, I have a marketing and sales background, and I'm running a financial services company. It wouldn't have been possible if I was not a continuous learner, a continuous student, which means that I've had to, read quite a bit, interact with people, learn, and that has been one of the passions. And, being a student has helped me get, if you may call it, a competitive advantage over my colleagues. I've always been a learner. The second thing I think, which has been very useful for me, which I think is a trait which is quite lost nowadays, which is being a good listener. A lot of people hear, but they don't listen. Mm-hmm. And I realized if you could just calm down and listen to what people are trying to tell you without judging them, without putting a context to things, it really helps you. It really helps you in that empathy, which will help you connect with your customer, your colleague, your friend, your family. And I mean, in a nutshell, being a good listener has been really, really helpful for me. And I think the third thing which has been very helpful for me grow over the years is a sense of extreme ownership. I think this is something which one is born with, and at times one has to also cultivate, which means that there is nobody else who's responsible for my actions except me. Okay, I can't blame anybody. If there is something which needs to be done, I can't depend on anybody. Okay, beyond a point, I have to take responsibility. I have to get it done. And this particular aspect of extreme ownership then pushes you to learn more, to read more, to listen more. So in a nutshell, being a good student, being a good listener, and extreme ownership. These are the three things which have been very, very helpful for me during my career, during my life per se.
That's really interesting. Thank you. So I'm going to move on to our next question. Do you believe banks need to be more aggressive in adopting new age technologies and embrace digital transformation more wholeheartedly?
Well, guess what? That's also a very open-ended question. There is no easy answer to that because you are actually talking about banks as a generic entity. But if I have to look at banks as service providers, I think there has been a fair degree of evolution across the banking spectrum. At one end, you have, in fact, regulation has led to that evolution. Technology has led to that evolution. So there is no one size fits all in terms of a bank adapting to technology and innovation. So let me quote a few examples here. People often talk about public sector banks not being technologically savvy enough. Okay. On one hand, you have somebody like an SBI and a Bank of Baroda who's using cutting edge technology to connect with the customers across the country and globally.
Right.
On the other hand, you have to realize that the customers which the PSU banks deal with, they're not necessarily technologically savvy. This is actually they cater to not exactly the bottom of the pyramid, but more technology impaired or technology challenged people. So to have too much of technology going there in terms of a customer interface really doesn't make sense.
Mhm.
People come to banks because they trust banks, and banks get trusted because they lend comfort. In this case, when people are technologically impaired, comfort comes from human interaction.
Right.
Too much of technology beyond a point will scare people off. Okay, so I think there is a judicious amount of technology which is being used. Having said that, this is basically something which is continuously evolving. So what banks thought that they were technologically savvy and they were doing certain thing, a certain paradigm of things for their customers would soon be, upstaged by somebody else. So there is this constant need to evolve, which is where I see a lot of private sector banks, okay, teaming up with fintechs and giving them sandboxes to operate in, and after that adopting their technology. Two of the banks which immediately come to my mind are Yes Bank and RBL Bank. I think the growth has been primarily because of fintechs. They've adapted to fintechs. They've given in the required sandbox, the required regulatory clearances, the sort of cyber security which they require, and that has helped them grow their business.
Mhm.
So, in a nutshell, I think where it is required, banks are adapting, banks are evolving. At one end of the spectrum, they have to continuously adapt and evolve because they don't have a choice. The customer segment they're dealing with is demanding that. On the other hand, they really don't need to do that because the customer segment still depends a lot on human interface. I don't know whether I've answered your question, but these are my thoughts.
Mhm. So, how well do you think financial services are responding to the developments in AI and automation?
You see, when you talk about banks and then financial entities, so non-banking financial companies, I think there are two differences. One is in terms of structure. Banks are fairly well regulated, and NBFCs, non-banking financial companies or financial entities, are fairly nimble in terms of their approach. NBFCs, by their very nature, have to be, when you say nimble-footed, they have to continuously evolve. They have to continuously go to the last mile customer where banks are unable to reach because of a variety of reasons. That has led to a fair amount of adopting of technology. AI, I'm not too sure, but you know what is the most heartening part? You are seeing NBFCs like Bajaj Finance who are now coming in, Bajaj Finserv, Bajaj Finance, who are now coming in through their NBFCs, through their entities, and who are saying, no, listen, we want to use machine learning, we want to use artificial intelligence to grow. In fact, from what I hear, NBFCs like Bajaj Finance don't benchmark themselves just on other NBFCs. They benchmark themselves on the likes of Amazon.
Mhm.
They say what we have is data. What we're good at is mining data. What we're good at is processing data and understanding customer credit profiles. So Bajaj Finance, I think, was one of the first few who actually started the lending business based on analytics. Lending in terms of 30 seconds, 45 seconds. All of this happens when you have a very huge digital stack and huge customer data which are mining continuously. So I think the future is extremely bright. Few of them like Bajaj Finance have really scaled it up. And I think a lot of other people will follow suit.
So, what could we be doing? What should they be doing better in terms of adopting AI and automation?
I think the biggest thing which should change is the mindset.
Right.
Let me explain how. I just talked to you about Bajaj Finance and Amazon. You see, most of us in the industry, whether it is investment management, which I represent, or NBFCs or the like, I think we're basically financial services companies looking at technology as an enabler. the mindset which needs to change is we have to look at ourselves as financial services companies or other technology companies with financial services as just a product.
Mm-hmm.
I remember when I was, a few years back when I was on the jury of the India Fintech Forum. I remember Policy Bazaar, or was it Bank Bazaar? I'm not too sure. They had come and made a presentation, and they talked about selling mutual funds and giving advice. And being the old school mindset that I had, I actually asked them. I said, "How will you do that? How will you give advice? Because advice is very customized." In 30 seconds, the man came back and said, "Listen, you think advice is customized, but almost 80% of the advice which we give can be put into certain blocks. So we know what a customer is going to ask. We already have an answer ready. So we think we are ready to give advice." Now, that was my first very big learning, that if you stop thinking like a financial services company and start thinking like a fintech, what does a fintech do? Fintechs basically identify problems and then create solutions.
Mm-hmm.
Okay. So the problem could be anywhere. It could be the pay tech, it could be the reg tech, it could be in any space. You will find the problem and find a solution. Whereas most of us in the conventional financial services space, we look at the financial services business per se and we say, okay, we have this problem. How do we increase this? How do we do that? It doesn't work that way. So the biggest thing which needs to be changing right now is mindset. And I think Bajaj Finance is leading the way and showing that.
Mm-hmm. So how do you support customer servicing and support? How will that change with technology, especially after we get out of the current pandemic crisis?
Interesting question. I think the last time we saw a problem like this, which affected the country as a whole, was during demonetization.
Mm-hmm.
You see, what we normally tend to do is to, so let me just step back. What happened during demonetization was that, the entire payment system came to a standstill. The conventional payment system came to a standstill. And after that, you've seen the growth of the entire payment industry infrastructure. And that was based on the India stack, the digital stack, which is the Aadhaar and everything which has been collecting data. That is the India stack which has actually used that. So the payment infrastructure was built on the India stack. The entire digital infrastructure was built using that. Now, because of the current pandemic, what has happened is there is a complete lockdown. There is no human interface at all.
Mm-hmm.
Okay. So there are two things I think which will start coming up. I think there will be, how do I answer this question? You see, we were already doing a lot of non-human interface, if you will, with customers. If you go onto a Swiggy, you see a chatbot which is talking to you, all of those things were happening. But there was always this reluctance from a customer's point of view to actually share too much of data with somebody whom you've not seen, somebody impersonal. Okay. And that would always be something which would hinder the experience. You really cannot have a very good customer interface and a customer experience if the customer himself is not willing to go the whole hog, right? Now, for example, this interview which you're doing with me, under normal circumstances, we would be sitting down and doing it face to face, right? But because I'm just assuming, but I'm just saying that because of this pandemic, we are now using technology like Zoom, which we were hitherto unwilling to do, right? So there is a certain barrier which has come down.
Mm-hmm.
This entire discomfort of not using impersonal technology has come down. And I think that is going to be the biggest takeaway. People are going to be more and more comfortable dealing with impersonal technology because there will be more and more reluctance to go out of the house.
Right.
Okay. So they will have to start sharing more and more data, which means that industries which are into cybersecurity and, bandwidth dissemination, all of these are very, very big industries.
Mm-hmm.
If I can just slightly digress and tell you how things will change post this pandemic.
Yes.
This entire digital stack which we have, there is also, I believe, I was listening to Rajan Anandan of Google the other day, and he was mentioning on this webinar that there is this entire health digital stack which has been created by the government of India, right? So Ash, what is going to happen is tomorrow, if you want to travel in the near future, 6 months from now or 9 months from now, what you will have with you is a device which will record all your vitals. It will be a health passport. You will have a unique digital number with you, which will record all your vitals. And if you're not fit enough to fly, you will not be able to fly. So along with your airline ticket and your passport, this is another clearance which you will need to have. This is a completely impersonal thing. And yet the data which you're giving, it is very, very personal. If I want to fly, I have to make sure that data about my personal health, my personal illness, I will have to share. Otherwise, I will not be able to do business on a day-to-day basis, right? So I give you two examples of how post this pandemic things will start changing. There'll be a lot more customer interface, which was earlier not possible because it was impersonal, which is now going to start becoming possible. A third example I can just give you is just today I was having a conference call with my team, and we were talking about customer onboarding. In our business, there is something called KYC, in-person verification, signing on physical forms, franking of forms, which is a legacy of the past. And we just can't do it. We just can't do it. There is nobody who can go and collect forms. You just can't notarize forms. So we are now working on things to automate things, talking to the regulator to see how we can create an entire ecosystem along with our vendors, whereby everything passes through seamlessly. Yeah. So very long answer to a short question which you asked, but this is how I think things will start really, really changing.
Mm-hmm. Where do you think most of the resistance is coming from? Like you said that customers aren't open to it. So how can we sort of change that? What can we do on our end to change that sort of mindset so that customers are more open to interacting with the chatbot and maybe not necessarily sharing that information, but being more open about it?
You see, necessity is the mother of invention. If you don't have a choice, you don't have a choice.
Mm-hmm.
Okay. I have now taught my 80-year-old father, okay, how to use Paytm.
Oh my goodness.
And how to order through Swiggy.
Mm-hmm.
Okay. And I'm now trying to teach him how to order through Big Basket because he doesn't have a choice. Right. If he wants to have something, he will have to order. In this pandemic, he doesn't have a choice. Right? Mm-hmm. So I think necessity is the mother of invention. People will have to shed the reluctance if they want to go about business as usual. You have to remember one thing that, in fact, there is this very interesting book, your viewers should read. It is by Thomas Friedman. Okay. It's called Thank You for Being Late. He says it's a very interesting book, but I can just give you one thing, which is something which is left a big impression on me. He says throughout the evolution of man, change has always happened at a pace which is slower than the rate of the human adaptability to change. So he's saying there are three things which are happening currently, which are changing mankind, which is change, rate of change, and global warming. Rate of change is basically Moore's law, right? You're talking about things changing every 18 months. He says earlier the rate of change was not so fast and humankind could adapt to it. But today the rate of change is so fast that it is taking time for people as well as regulators to adapt to it. So by the time you have a set of regulations coming in for Uber and Ola, you're already moving on to driverless cars, right? So the regulations will already fall behind schedule because the rate of change is very, very fast, right?
Right.
So this is something which is a basic reluctance which will always happen. Mankind will not be able to adapt to all of this. You have to give it time, and opportunities like demonetization and this current crisis are tailor-made for people to go and reluctantly just adapt this technology, which is where you'll see the next boom happening.
My next question is, do you believe blockchain is here to stay and will fundamentally alter the financial landscape?
Blockchain is something which engages extreme reactions. There are some people who are terrified of blockchain, and there are some people who get very excited by blockchain. I think my personal sense is blockchain is here to stay. It will only evolve. Now, if I can just talk to you Bluetooth, not blockchain, which I'm talking about apples to oranges comparison. But the growth of Bluetooth actually happened because there was industry collaboration, common standards, and the transaction cost or the way you deal on Bluetooth, the cost came down, right? Mm-hmm. Something like this will have to be put in place for blockchain for it to evolve. Already there are some insurance companies in India which are doing it, but it is going to take time. People understand the benefits of blockchain. People understand, that it is going to make a big, big difference in terms of trade, in terms of trade finance, in terms of, investments, a lot of other things. But probably it will take a long, long time. People are still not ready for it. Yes, the time for blockchain. Yes, we need to be ready for it. Yes, we need to adapt. But it will happen simultaneously if you have a lot more sharing of information, a lot of entry standards, and the transaction costs coming down. More importantly, I think the regulators have to look at it a little favorably. So that is something again which will spur me on as we go along.
So this brings me to my last question. Are there any other sound bites you'd like to share with our viewers?
Interesting. So instead of sharing sound bites, would it be okay if I actually talk about 3 books which have made a very big impression on me?
Yeah.
And if yeah, I think because I do a lot of reading. I'm a very voracious reader. By the way, I'm such a voracious reader that if I go to a restaurant, I start reading a menu card. I just can't get. I have to read all the time. It is something which sustains me. So there are 3 books I'd like to share with your readers, with your listeners, with your viewers. One of the biggest impressions which has been made on me is a book called Start with Why. It's by a gentleman called Simon Sinek. Simon Sinek. Yeah. This guy actually made me question what I stand for, what my company stands for. So at a personal level and a professional level, it made me question why I exist. Okay. It was very uncomfortable reading the book, and I had the opportunity to work in a company where I could implement the learnings from this book. We actually changed the entire business model from the learnings on this book, and it worked very successfully. So if you find if the more time it takes you to hunt your why and get across to your why, the easier the how becomes. Okay.
Right.
So I would recommend that this is a book which your readers should read. The other one obviously is Thank You for Being Late. I think this is something which has been written by a guy who's a little ahead of his time. And for people who are continuously adapting to what is happening in the world right now, this is something which gives us a heads up how things could change going forward. The last book which I would recommend which is a fun book, which I completely enjoyed reading, but which was very profound. It's by the author of Dilbert, this guy called Scott Adams, who's written this book called How to Fail at Almost Everything and Still Be Successful. And I could empathize a lot. There have been a lot of things I've done in life, a lot of small things I've done in life, small learnings I've had in life, a little bit of risk here and there I've taken in life, which has made me the man I am. So it's been very, very useful. And these are 3 books I think your viewers should read.
Is there any advice you'd give to someone who wants to pursue a career in financial services?
The advice I would give is very exciting career. There are different aspects of financial services. You should explore what really suits you the best. Don't just get into the stock market because that seems to be the most exciting. That is actually the most grimy part of it, the stock market. I deal with the stock market day in, day out, and I can tell you that what you don't see is quite grimy. But yeah, find out what you like, find out what you love. Financial service is something which is very exciting. It is for every person who wants to find their niche. But remember one thing, you have to work very, 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 very hard. Okay. Data in financial services is available to everybody. What you interpret the data to be, what your understanding is, and how you implement it is extremely tough to do. So unless and until you are committed to a very grueling sort of hard work which you want to do, don't get into financial services. Get into manufacturing. Financial services, or for that matter, anything in services, is going to be very, very exciting, but very, very sort of challenging as well. You'll have to work very, very hard.
Do you think AI and automation will sort of aid in understanding and interpreting that data?
Yes. I do think that will happen. In a way, it's already made its presence felt. You have algorithmic trading, you have ETFs, which are taking data and making a lot of sense of data. But equally, there are people who work on this data, understand the data, create alpha out of that. That is, the alpha is basically the difference between the benchmark and what you give to the client. Okay. And that itself is an art. See, a science can be taught, but art has to be self-taught. You have to have that for that thing. So it's such an exciting space. I can tell you that I have never got bored for even a second in this industry. I've been in this industry for so many years. It always keeps me on its toes. And I'm able to keep up with it simply because I work very hard on it. I do a lot of reading. I interact with a lot of people, talking to people like you, understanding what is happening in the industry. That's very, very exciting. And that's what one should always do.
Okay. Cool. So that was my final question. I know it branched out into multiple, but thank you so much for talking to us.
Thank you so much for having me.